All right, good morning, good morning, good morning. Thank you guys so much for tuning in. Today is September 16th, 2024. And yeah, let's get right into the charts here. All right, so coming into today, I do want to take a look at the higher time frame here. All right, so this right here is the weekly candle. Based on that weekly candle here, what can we anticipate for prices to do? We can anticipate for prices to take out previous week's high, right? And what are some lower time frame PD arrays relative to the weekly time frame? Well, on the daily time frame here, we have created this daily fair value gap, and notice how so that is the morning low. And notice how this orange shaded box right here, that is a daily CIBI. So now that we're trading above this daily CIBI, I would anticipate for the CIBI to be treated as a breakaway gap, or not, sorry, not a break, as a support level. And yeah, I do want to see prices continue higher here. So trade down to continue higher, take out previous week's high, and then quite possibly complete the monthly objective as well, which is to take out that monthly high. But yeah, let's get back into the charts here. So as of right now in the morning, I can anticipate for prices to retrace back into the daily fair value gap. So in order to do that, we have to take out. So us taking out previous day low is technically us retracing back into a daily fair value gap. So I do want to see us have some sort of bullish reaction to it after we tap into the daily fair value gap. So if we take out the daily fair value gap here without giving me an entry, the furthest, like if I were to short here, right, to take out previous day low, once we get past this orange line, or sorry, it's not orange, but after we take out that blue line or retrace back into discount of the daily range, I would actually sit on the sidelines and wait for some sort of reaction if we are going to get a bullish reaction to the daily fair value gap / discount of this daily range here. And the reason why I say discount is because prices trades into a 4-hour fair value gap, and we had an expansion higher from it. So this, I would treat this as a significant swing low. So we just took out previous day low, and we are trading inside the daily fair value gap now. So look at that. Notice how we are trading inside that daily fair value gap right now. And there is actually SMTs between ES and NQ. ES, we are nowhere near that daily fair value gap. So there's probably going to be an SMT here. So with that, if you are a swing trader, you could have taken some buys there, because there is a larger SMT, and we can target previous week's high. But I'm not a swing trader, and yeah, and like I said, I'm going to only short up until this blue shaded line right there. So now we are trading inside the discount of, like I said, the higher time frame dealing range here. So you would want to see how prices treats this discount level here. Are we going to get an expansion higher away from the discount? So you want to see prices trade into here and then continue higher, or will we just close all the way through? But like I said, higher time frame narrative wise, we are trading higher. So if you're taking a look at this on the 4-hour time frame, or actually let's make it the 12-hour, this is almost like a here's your original consolidation. market structure shift. So this is technically, this is the second stage accumulation, and once we trade past the second stage accumulation with displacement, this is going to be strong right here. Or like, I'm sorry, but if we can get a displacement above the second stage accumulation and we retrace back into that fair value gap, this is going to be a good buy. And yeah, we can target, like I said, we can target the high end of this original consolidation here. But there is a reason for us to be trading higher. Notice how this is a higher time frame dealing range. We trade into OTE, we get a, you know, an expansion higher away from it. Alright, so it looks like we are trading within the lower portions of this daily fair value gap here actually. So notice how we are trading within the below the discount levels of this fair value gap. It is, we just passed the consequent encroachment, and it looks like we are about to tap into the 0.75 level. Interesting. So let's watch how we close here on this 4 hour and 8 hour. If we have a bearish 4 hour and 8 hour candle closure, and we have confluences on the lower time frames that are telling us that, hey, we are going to trade lower here, then I would consider taking a short. But like I said, keep in mind that on the higher time frame narrative wise, we are trading into higher time frame bullish PD arrays here. Monday we don't have any red folder news, so that's just something that no, I noticed we don't have a red folder news today, so yeah. Okay, I like how we. Okay, nice. Let's see how if we can create a 15-minute fair value gap. If we create a 15-minute fair value gap, and we have a bearish 15-minute reaction to the 15-minute fair value gap, then I'll take a short. But if we disrespect the 15-minute fair value gap, then I'll take it long. There's only two scenarios that could really happen here, but yeah. Keeping in mind of the higher time frame narrative. Like I said, higher time frame wise, we are bullish. I want to see us take out previous week's high. But why are we trading lower right now? Well, if you're thinking of the weekly power of 3, what do we usually do? We create the open, we create the low, we create the high. So right now, all prices is doing is essentially creating the low of the weekly candle. And then the next upcoming days, you could trade expansion models in mind of, like I said, the weekly expansion higher. So we're trading inside that daily inversion fair value gap now. So that orange level is and should be treated as a support level here. About 20 minutes left till the 4-hour and 8-hour candle closure, so I will just wait until then, until we can get a candle closure right there, and then I'll consider taking anything. But before the 10 o'clock open, I do want to go over some of the pros and cons and improvements with you guys here. So let's get into it. Okay, let's see if my thing is gonna. Okay, there it is. Opening up here now. Okay, so pros and cons from previous week. So during September 9th, 2024, I was able to incorporate multiple trade concepts in a trade model, time frame alignment, breakaway gap theory, and premium and discount. And I used the fact that prices likes to retrace into discount as a target. So let's go into that trade and take a look about what I'm talking about. So look at how prices, it's just like super sloppy, right? But during the afternoon on September 9th, notice how we created this bearish hourly candle, bearish 30-minute candle, and take a look at the 15-minute structure here. 15-minute structure is suggesting lower prices as well. So we have time frame alignment. So this 15-minute candle, this 30-minute candle, and that hourly head candle have the same low. And on the 15-minute time frame, we have created a 15-minute fair value gap. However, I don't anticipate prices to trade all the way back up into this breakaway gap. I want to see prices take out the 15-minute low first. And so those are some confluences of lower prices. Another confluence is look at how prices closes on this 30-minute candle here. We closed below two 30-minute BISIs, so we're disrespecting bullish PD arrays. On the 2-minute time frame, we have created this 2-minute fair value gap, and this 2-minute fair value gap suggests and helps the idea that we're going to continue to trade lower. So you could take a short whatever price this trades back into this 2-minute fair value gap to take partials at the 15-minute and the 30-minute and hourly low. So on the 1-minute time frame here, we open up at 2, we trade into the 2-minute fair value gap, and then we start to, you know, trade lower. And yeah, this is an A+ setup. We have time frame alignment, breakaway gap theory, so there's a reason why we shouldn't trade back up into here. And on the lower time frames, we have a bearish PD array to short off of. And yeah, so like I said, time frame alignment, breakaway gap theory, and the reason how, and the fact that we are trading back into premium and discount of the stealing range. So you take the swing high, take the swing low, prices likes to trade back into the discount of the range. We can target that, so that could be our target. We're not necessarily longing when prices trades into discount, but we're using it as a target because prices does 4 things: takes liquidity, generate liquidity, rebalance fair value gaps, and retrace into premium or discount. So yeah, that's the very first pro. Second one is, even though I saw a trade model present itself, I was able to think objectively and not partake in this particular trade because of the breakaway gap theory. I wanted to see prices close above the previous 15-minute candle size. So this is actually what I'm talking about here. So this model, so pay attention to this 15-minute fair value gap that I have the chat box kind of touching. So this 15-minute candle, I wanted to see this 15-minute candle close above the previous 15-minute candle's high. So that would have suggested the idea that, hey, we're bullish. But we got a candle closure below the 15-minute candle's high. So in my minds, we could trade back into this 15-minute fair value gap. And yeah, the model, I mean, the 30-minute is bullish. 15-minute, like I said, it suggested that we could trade back into the 15-minute fair value gap if we had gotten a candle closure above the 15-minute candle's high, the previous 15-minute candle's high. Then I would have, you know, considered something, but we didn't. So back to the pros and cons. And yeah, third one is I was extremely patient coming into the week, or into previous week. I knew that it was CPI and PPI week, so we could have some large range expansions, which we did. And yeah, it was a really, really good week for my mental and discipline wise. It tested my discipline, and I was able to, yeah, stay extremely disciplined and only stuck to the model that I created for myself. Some of the cons, so not being focused. So because of how price action was last week, I wasn't necessarily extremely focused as I should have been during my trading sessions. I would watch YouTube or, you know, read anime or something like that, and something that I shouldn't be doing. And yeah, we're going to continue to work on that. Improvements are being more selective, or just, I guess, be selective with the trades that I do take. Questions I should be able to answer whenever I do take a model is, why did we create that power of 3? Is there a reason we should have created that bearish candle, or is there a reason why we should have created that bullish candle? Did we trade into a fair value gap? All right. And is there time frame alignment? Is there multiple time frames confirming that we should be going higher right now? And can we apply breakaway gap theory with this model? being selective, you're going to take less trades, but understand that less is more. Be focused during the trade session. I'm not allowed to be on my phone when I'm trading. So, bye, Matt. So, starting from 8:30 till 10:30, I'm not allowed to go on my phone or like spend a significant amount of time, a significant consecutive amount of time on my phone. So, I shouldn't be on that phone for a prolonged period. Yeah. Yeah, bye now. Aggressive trading. If the draw of liquidity is clear, right? So I feel like this is a common problem with a lot of traders. They believe that a draw of liquidity is clear. They believe they know where the market is going, right? So they kind of it's like a delusion. They kind of like fake their minds that they're trying to figure out a way for them to enter the trade. So for me, even though the draw of liquidity is clear, if the entry model isn't present, you cannot take it, because your entry model is essentially your attack pattern, your way of mitigating risk. If you don't have an entry model, then how are you going to mitigate the risk here? You don't you can't even tell me why are you entering. You can't tell me where your stop loss is, but all you're simply taking the trade off of is your basis of, oh, I know where prices is going. If you knew where prices was going every single time, then what's the point of having stop loss? Just trade without stop loss, and which I'm telling you guys, don't do that. But like I said, I feel like that's just a very big common problem within the trade space is, and it's a problem with me too, is like I said, you take a entry without a model presenting itself because of the idea that you know what the draw of liquidity is. And yeah, and the second thing is, or I guess the last thing is, I want to be able to pay attention to SMT. If my target high has essentially been met on ES and it hasn't been met yet on NQ, move stops to break even. There should be no reason for me to be risking in that trade anymore. And yeah, so be more selective with the trades, being focused during the trade session. Aggressive trading. Understand that if the draw of liquidity is clear but the entry model isn't present, don't take it. And pay attention to SMT. SMT is extremely important. So this is my SMT chart here, and yeah, looks like we are. It looks like we could be getting some sort of reaction to the daily fair value gap here. So now, based on the hourly closure here, we can anticipate for prices to rebalance this hourly fair value gap here. And yeah, let's check it out. So there is an RTH gap here as well. So this RTH gap, we could essentially fill it in to the consequent encroachment, or fill it in all the way, or we could just continue lower from the RTH gap. But like I said, if you keep this in mind with narrative and price structure, you wouldn't see that as a resistance level. I would actually essentially base my trade here off of filling in that RTH gap. And yeah, I do want to see prices trade higher here. We still have about 7 minutes left, so let's just wait for that. And let's take a look at 2 A+ setups. So I just went over 1 A+ setup with you guys, September 9th. So like I said, we had an objective this trade for us to retrace into the discount of the dealing range. We have time frame alignment. All 3 time frames, the 15-minute, 30-minute, hourly, are telling us that we are going to trade lower now. And essentially on the lower time frames, that's when it's telling you, hey, we're going to complete this objective now. 2 minute time frame, we have a 2 minute fair value gap that suggests the idea of us trading lower. So you take the entry at the 2 minute fair value gap to target the 15 minute, the 30 minute, the hourly low. And the objective of this trade is to rebalance or retrace into discount of the dealing range. So I want to see prices retrace into that discount. And then you can set up standard deviations from that swing high to the swing low. And yeah, like I said, it looks like on the hourly time frame right now, it looks like we could be trading higher to target that hourly fair value gap or rebalance it. So like I said, 4 reasons prices move. You guys should write this down. Generate liquidity, take liquidity, retrace into discount or premium, and rebalance fair value gaps. So in this case, we are retracing into a or rebalancing a hourly fair value gap. That would be my overall objective here. And notice how we still have London highs and Asia's highs intact. So I actually do want to note that out because we have session liquidities to target here. So that is London highs. And I do want to note out Asia's highs as well. So we have now completely closed above this 5 minute SIBI. That 5 minute SIBI should have been treated as a as essentially resistance to help us trade lower, but we didn't. So we didn't respect it. So now we are trading higher. So I do want to see prices expand higher here. So like I said, is there an entry pattern for us to take the entry off of? We could create a 3 minute fair value gap or a 5 minute fair value gap, sorry, for us to trade back into. Looks like we just, okay, I was gonna say that it looks like we just got a reaction to a fair value gap on the lower time frames, which we did. So now I would wait to see how we trade here. So we actually just traded into the hourly fair value gap. So we already rebalanced the hourly fair value gap. Now I would actually just sit on the sidelines because I actually don't like how we traded back into that hourly fair value gap already. Yeah, I don't really like that. That should have been like I wanted to take a long into that hourly fair value gap, but because we have already tapped into that hourly fair value gap, my chances of this trade just drops a little bit. Like I said, I mean, we still have room to go higher, like based on the 30 minute, hourly, and the 15 minute. It's just my objective, that trade was to rebalance that hourly fair value gap. And we did that before having or being allowed an entry. So I just got some food. Take a look at what's happening on ES right now. ES actually is relatively is so much closer to previous day high than NQ. Just take a look at what's happening on ES. Prices did just trade back into a 5-minute fair value gap. So that 5-minute fair value gap could have been my entry pattern to target the 15-minute, 30-minute, and the hourly high. But like I said, I don't like how we rebalanced the hourly fair value gap already without having an entry for that. So I mean, I don't mind not being a part of this trade here. So like I said, I don't really care for that. I don't really care that I wasn't able to get an entry into or I guess a hourly to rebalance the hourly fair value gap. But yeah, it's just a model that, I mean, I guess I could have taken, but like I said, I would have rather waited and for prices to close on the hourly candle and then not rebalance this hourly fair value gap yet, and then once the hourly candle closes, we trade back into that 5-minute fair value gap, and then we can rebalance the hourly fair value gap, which we didn't do. So I'm just gonna sit on the sidelines and enjoy my food. Just eating rice with chicken. Dixie looks like it's trading higher here right now. I don't like the idea that we're trading higher on the dollar. That means we should be trading lower on the indices. So let me mark out the 10 o'clock open here, because it is a important opening time window. This is a really lethargic move. It's not as strong as I would have preferred it, because like we should have taken out that 15-minute slash 30-minute slash hourly high already, but yeah, I don't know. We haven't taken it out yet, so. I don't really like how that 10-minute candle closed. Not the... Interesting. Let's stay on the full hour here, see what's... Did we trade into the RTH gap yet? We just traded into the lower portion, the lower half of the RTH gap. Oh, I want to take off my shirt. I'm sorry. It's like the food I'm eating is actually really hot. Okay. Yeah, let's just wait for more structure, but if I was in this trade right now, I would be in my mental capital here would be spent. It would be spent for sure. How many times did we have to retrace into this 5-minute fair value gap right now? Decent amount of times. Yeah, like we tapped that thing a decent amount of times.
like I said, we still haven't taken out the 15-minute slash 30-minute slash hourly objective yet. So I mean, we still have room to continue higher, but like, are you willing to risk anything in this move? You would have been in 11 minutes in total in this trade already. I mean, it may not seem like a long time, but this back and forth price action right here that you would have been in is something that is just not favorable. And like I said, the reason why I didn't take this trade is because we already rebalanced the hourly fair value gap. We didn't get the complete rebalance, but we for sure did tap into that hourly fair value gap, this hourly SIBI. So this happening here, I just didn't like how we did. I didn't like how we rebalanced the hourly fair value gap. If we had, if we hadn't rebalanced it yet, and we still had the bullish candle closures, power of 3 model, time frame alignment, lower time frames, having a lower time frame PD rate to enter off of, then I would have taken the model. But we rebalanced the hourly fair value gap before the 10 o'clock open, so I'm not going to take anything. This is the perfect time for us to trade higher right now, actually. If you guys take a look at the dollar, it looks like we're rebalancing this 5-minute fair value gap on the dollar. So this, us moving lower on the dollar, should allow the indices to trade higher here. So this is good. However, we should do it within like right now. On NQ, to be honest, we should complete the 15-minute, 30-minute hourly objective right now. But we'll see. So this very next 15-minute candle, I am anticipating for us to take out that 15-minute high and then the 30-minute high too. We should see higher prices here. Like, this could be a model in itself, to be honest too. Now, you wouldn't have taken that model anymore, but like I said, it's just something you could have taken. But yeah, we should take out this 15-minute swing high now, or I would say 30-minute and hourly swing high. We never once closed below this 5-minute fair value gap. It's just, like I said, we kept like tapping into it. So I mean, your mental capital, I mean, this is like a lot of movement back and forth to boom, tap in, and then a little bit show a willingness to trade higher a little bit, boom, trade, and then it just a lot. So We tapped into the hourly fair value gap once again just now. Dixie's trading lower here too, so we should be seeing higher prices on ES and NQ. I don't like how we are. Yeah, I don't know. I would just wait. I would just wait until a model presents itself that I'm willing to take. Right now, I'm not willing to take anything. And I'm gonna be real. I don't think I've taken a single trade this month yet, and it's already 16 days into the month. I haven't taken a single trade. That's crazy. Like, it has been such poor conditions. For me at least, my model hasn't presented itself. With NFP week, I knew NFP week was going to be like a little bit iffy. And CPI, PPI week, legit, like, nothing either. So, I mean, like, I don't really know. We do have FOMC this week, so that's something that I am, like, rather, not, yeah, I mean, I'm looking forward to it, but it's just another news event. If my model doesn't present itself, then I simply just don't take it. But yeah, once I hit the hourly mark on the stream here, I'm gonna call it a day, because I do not want to be in front of this price action right now. But yeah, let me just recap over what I am thinking about on the higher time frames here. So, like I said before, we have tapped into a daily fair value gap. On the higher time frame, weekly time frame at least, I do want to see us take out previous week's high. So previous week's high is a draw of liquidity for me. So I do want to see higher prices on the indices. Monthly time frame, based on this monthly candle, what can we anticipate for higher prices? So higher time frame right now is telling me that we should be trading higher, but the reason why we traded lower here on the daily time frame is to rebalance a daily a daily fair value gap. So we should expand higher here this week, but when should we do it? FOMC day. We have red voter news tomorrow too as well, so we could expand higher Tuesday and Wednesday. I'm not too sure. I'm not. I wouldn't go that far into my anticipation skills, but yeah. I did tell myself I was gonna go over an A+ setup with you guys, so I went over one, so I'll go over another one. Let's go over this one. Actually, I've gone over this one a couple times maybe. Okay, let's go over this one. So, this is an Asian session trade, I do believe. So, the day prior, right, during the New York PM session, notice how we expanded lower here. We expanded a lot lower. So, coming into the Asian and London session today, I did anticipate some sort of retracement. So notice how we're retracing inside a 4-hour SIBI, a 4-hour bearish PD array. So on the 15-minute time frame, if we see a bearish candle or 15-minute, if we see a creation of a 15-minute bearish PD rate when we're trading within a 4-hour bearish PD rate, it makes logical sense on why we should have created it. The style that I essentially trade isn't, I wouldn't have taken an entry here right at the 15-minute fair value gap when prices trade back into it. I would have waited to see how we closed after trading into the 15-minute fair value gap. So notice how we had a 15-minute bearish candle closure here after coming into the 15-minute fair value gap. That's residing inside a 4-hour fair value gap. So there's layers of this. There's layers and layers. There's a market structure shift here. If you guys take a look on the left side, we traded into a 15-minute BISI. We continued higher, and then after we traded a little bit higher into this new day opening gap, we had a reaction to the 4-hour fair value gap. We created a 15-minute bearish fair value gap, and we had a reaction to that bearish 15-minute bearish fair value gap. So this 15-minute model is suggesting lower prices. On the lower time frames, is there an entry pattern to enter off of? Well, there's a 2-minute fair value gap here to target the 15-minute swing low. Prices trades back into the 2-minute fair value gap, and I'm targeting that 15-minute low. And notice how this 30-minute low here as well. So yeah, it's really in and out. Like I said, we know why we created the power of 3. We even know why we created the fair value gap. Yeah, higher time frame narrative or lower time frame model is aligned with the higher time frame narrative, so it could be an expansion trade. And yeah, that's gonna wrap it up for going over the A+ setups, going over the pros and cons, going over the improvements this week, and yeah. I need to start sleeping a little bit earlier. I don't like the idea of sleeping so late and being so tired in the morning. Hopefully I don't get copyrighted this stream. I don't know. I have the music on a really, really, really low, so. Let's see her. Let's see what we're doing here on 50-minute. So we have bearish. It looks like we are having a bearish 50-minute and 30-minute. So yeah, that's something that I am noticing right now. We have 5 minutes left here on this 15-minute / 30-minute candle closure. So yeah, let's just wait and see. We just now closed below a 5-minute BISI, so now that BISI, we don't essentially have to trade all the way back into it. It's just that that sign that we close below it is bearish. It's a bearish signature in price. I actually do want to see prices trade back into equilibrium here, or discount at least of this stealing range. So we just traded back into discounts.
We have 3 minutes left, or about 4 minutes left. This candle, 15-minute candle, 30-minute candle.
This could be an entry model here. I do want to pay attention to how we close here on this 3-minute candle closure. I like this actually. This is a model I'll take. 15-minute bearish, 15-minute, 30-minute bearish. It's just this 5-minute, which is telling me otherwise right now. But 10-minute, 10 minutes in alignment. 3-minute, 576. I'll take this model here to target that 15-minute, 30-minute low here. Entry pattern is off of a 3-minute fair value gap, which should be traded back into. And so we just completed the objective without getting an entry pattern. So I am actually going to just close this stream there now and then. I didn't, like I said, I was waiting for prices to trade back into this 1-minute / 3-minute fair value gap. We didn't get that retracement, and we just completed our objective. After completing the objective, is there anything else for me to force? No, there isn't. So thank you guys so much for watching, and until next time, peace out.